All right, good morning, trade pros, and welcome to our morning live session for Thursday, December 28th of 2017. It's Thursday, it means it's hockey day for me, and my legs, the quads are very sore today. What are we going to talk about in our morning market update? We're talking about shares and how they've performed and how markets have done overnight, obviously. We're also going to talk about the US dollar and Bitcoin. So it'll be a little bit shorter today, but a little bit more in depth. Less topics, but more depth to them. All right, so let's get started. Today's market in Asia. Japan is down 0.6%. Hong Kong is up 1 percentage point. China is up 0.6. India is down 0.2%. So we're getting mixed markets. Weakness in Japan, or a slight strength here in Hong Kong. Actually, not slight, 1%. It's a really good rally. In Europe, at midday, London's flat. Paris is down 0.2, and Frankfurt's also down 0.2. So a little bit of more muted markets along Europe, more sideways and less volatility throughout them. They finished slightly weaker, but not that big of a dramatic event. It's not a big deal, all right? Futures in the United States here, Dow Jones is up 0.2, S&P's up 0.1, NASDAQ's up 0.2, crude oil's up 0.2% as well, and gold's up 0.2%. Something about this 0.2% that the market likes for some reason. Slow overall, all right? So equity markets are going to start to grind down to a little bit more of a halt through the next 2 days, today and tomorrow, as we close out 2017. It's been a fun year. It's been great. We've had a big rally. NASDAQ or Dow Jones is, if it hits 25,000, is going to be on track to do 25% rally in 1 year. That's phenomenal. It's on the back of the Donald Trump presidency, right? The Republican hype. It's on the back of tax reform, which finally passed. There's a lot of excitement that's built into the market on things that have already happened. And with Fed's last rate hike in December, that's putting some pressure on the dollar. That gives a little bit of a catalyst to equities and commodities to rally. But what we're saying here is the trend is clearly up, but it seems slow. Volume seems weak. So today, before I get any further, I want to tell you I'm going to echo the same advice from yesterday because I'm a broken record. But broken records are good. Sometimes they help you really know someone well. So here's what I'm going to tell you. Cut your trading size down. What do I mean? If you used to trade 6 lots in the S&P, trade 3 today. Reduce your trading quantity or the size of your positions by half and trade half the positions in total. So less volume, less frequency of trades, and less position size will really get you through these days very well. You should still be able to hit your profit target with that kind of discipline. All right, it might take a little bit longer, but that's okay. It's your job to watch the market and only execute whenever there's a high probability trade. You're not trading for the sake of trading. You're trading to make money. To trade to make money, you got to minimize risk and be patient, disciplined, diligent. All right, let's get into the U.S. dollar today. Actually, there's some news that we got to cover as well. Initial jobless claims this morning came out at 245,000 versus 240,000 expected. Continuing claims was 1.94 million versus 1.9 million expected. So more people are filing for unemployment insurance than expected. That's actually kind of a negative number. That came out this morning, so pretty negative. Not a massive increase versus expectations, but it's an increase nonetheless. Now, couple that with international trade in the morning that came out at 8:30, we had a minus 69.7 billion imbalance versus minus 67.9. So reverse those numbers, not reverse, but inverse some of them, and you kind of get the same number. But what we're saying here is the trade deficit is actually widening. It's not narrowing. Now, here's why. The exports increased, which is really good. The United States is exporting more of their stuff. However, imports increased to a larger extent. So despite the fact that the U.S. is getting more exports out there into the global economy, they're importing even more than they're exporting. So that's why it's a negative trade balance number. That's not good. Donald Trump's not going to like that. He ran on that platform, that agenda, and it looks like the U.S. continues to sort of import more than they export and import more than they produce, and widening their trade deficit. All right, 10:30 this morning, we got the natural gas inventories, and at 11, we have the Department of Energy oil inventories. This is going to be a blockbuster day for energy traders. We're going to be trading a lot of that. They usually come out on Tuesday and Wednesday, but the reason that they're pushed forward one day is because Monday was a holiday in observance of Christmas, and therefore now those reports get pushed forward, and they now have to occur on the same day. So 10:30, you get natural gas. At 11 a.m., you get crude oil. A very exciting day for energy traders. Those two reports could make up your whole month if you trade them properly. All right, and we are going to trade them in the trading room. All right, the U.S. dollar today has slipped to I forgot to tell you the rest of the stuff. It's not. We have a $28 billion 7-year note auction at 1 p.m. All right, it's not going to change anyone's game. If you're a bond trader, maybe. Actually, if you're a bond trader, you're definitely going to listen to that. The U.S. dollar index has slipped as low as 92.36. All right, the weakest level in 3 months on the U.S. dollar front. And here's why. Everyone says, why is the dollar dropping? Traders have been long this dollar for so long all year. They've been expecting, what have they been expecting? The tax rate tax rate drops. The GOP tax plan in the past, they've been expecting that. All right, check. They got it. What else have they been expecting? They've also been expecting to see the Fed's December rate hike, which is bullish for the U.S. dollar. Check. They got it. The Fed said there's going to be 2 to 3 rate hikes in 2018. Check. They got that. They got everything they wanted. And when a trade becomes everything that's priced in has already been priced in, and you got everything you wanted as a trader and you're riding a high, it becomes, hey, sell that thing to take some profit. That rally starts to get sold off to for profit taking. Then on the way down in that profit taking, it wipes out the retail trader stop who bought it right at the top. Inevitably, there's always people who buy it at the top. Otherwise, they wouldn't trade at that price. All right, so I know it's not you guys, but there is retail traders out there who are less TradePro inclined that follow their emotions, trade with their emotions with their heart on their sleeve. And unfortunately, that's when the wolves come out to eat the sheep. So here's what I'm going to tell you. The dollar's down 9% this year. It's probably the worst slide. It's on pace for the worst slide since 2003. But it's just profit taking on a trade that got a little bit of ahead of itself. All right, the dollar's weak. Look out for that. And that's kind of sustaining a little bit of asset prices higher throughout oil, throughout gold as well, and throughout equity markets. All right, Bitcoin, on to the main event of today. Bitcoin's down 28% from last week's high. All right, it's officially a bear market. For any other asset that observes the laws of gravity that constitutes a bear market, Bitcoin could escape this. It could be up to new all-time highs by the end of today's trade, and I wouldn't be surprised. I'm not surprised at anything that Bitcoin does at this point. It's manic. It's manic. It's euphoric. There's a lot of money coming in that isn't, how do I say this nicely? It isn't versed at trading. Isn't versed at participating in this type of price action. Isn't versed in markets, and unfortunately, those things don't tend to end well always. Sometimes revolutions happen, and Bitcoin can be one of them. So I'm on either side of the fence. I agree with both parties. I have friends who are very aggressive on both sides of their opinions. I just like to see what we get and trade it that way. I like to be right, but I don't look to be right in the market. I look to be profitable. Such a big difference. You take this thing inside your heart that says you have to be right all the time. You throw that thing away and you show up at the market, and you can do a great job. I promise you guys. All right. South Korea puts pressure to ban some Bitcoin exchanges. They say they're going to outright ban some of them, and that's what they're looking to do with the regulation. Why does that matter? South Korea is a pretty close ally to Japan. Japan accounts for about 24% of all cryptocurrency transactions. In a couple years back, when it wasn't as popular of a product, did you know that Japan was actually, or Asian countries in general as a block, which is a massive population in the world, accounted for 80% of all Bitcoin trading. That's where that product became popular first, all right, the continent of Asia, and then spread over with the hype over here. So South Korea is the first as well to start putting some real extreme pressure on it. Here's what they're saying. They want to ban Bitcoin. That's a bit of a tongue twister. And they said it's irrationally overheated market. And they're going to ban some exchanges outright and stop allowing banks to issue digital accounts. Could you imagine a country saying they're going to stop allowing their national banks to issue digital accounts just for Bitcoin? That's a pretty strong stance to take. And then on that news, Bitcoin dropped as much as 9% overnight, and it's been a little troubled since. I've been seeing, I'm going to say be careful on Bitcoin. Bitcoin, I'm issuing a be careful alert. The thing that kept everyone into it has now kind of scared investors, essentially. So what's happening here is we're starting to sell regulation and oversight starting to come in, not just from South Korea, but across the world. As we start to see these sell-offs, we start to see high volume. Look at the volume at the bottom of your chart. Volume's increasing on sell-offs and decreasing on rallies. That's the turning point or the reversal of a bullish market that may slip into a bearish market. And if you're holding for the long term, then you don't care. You're going to buy more. But if you're a trader, I'm going to say start looking to trade the weakness, start to sell rallies in this thing, and be very cautious. If you're going to short Bitcoin, though, I would probably say don't. Be careful. I wouldn't trade Bitcoin. I'm looking at it on the futures markets. There's not enough volume. There's not enough market making. There's not enough traders, participants to make it worth my while. we could do at TradePro Academy the same volume of returns as Bitcoin can, with a lot less risk and far less capital using futures, far less capital. That's the beauty of trading like a TradePro, is you're utilizing mechanisms that professional traders use to make literally whatever they want to make. Millions of dollars some traders make, depending on how they trade, what size they take. But it's far more possible to achieve your goal of trading full time with a lot less capital trading any of these markets in comparison to cryptocurrencies. Cryptocurrencies are starting to attract the kind of money that's looking to put $2 down into their cryptocurrency account and make $5 million. All right. And I know how that ends. Unfortunately, I've been around long enough to see how that ends. This time might be different. You never know, but be careful. We're starting to transition to a little bit of bearish price action. Keep an eye out on it. I'm not saying sell everything you got. I'm not saying buy here. I'm just saying be cautious. Tread carefully. Chin up and look around you and always be aware of what's happening. Take care. Have a great day. I got to get into the trading room. A little verbose this morning on this morning market update. Bitcoin's down. Dollar's down. Equities holding gains. Gold holding gains. Natty gas 10:30. Crude oil at 11. Huge opportunity today. Massive. Huge. See you guys tomorrow morning at 9 a.m. All the best. Take care and have a great day. And trade like a trade pro and manage your risks today. All right, there's no need to be out there doing 30 trades. Do less. Achieve more with less. That's the power of being a trader. Take care. Goodbye. All right, trade pros. I got to show you the trading journal I was talking about here at some point today as well. Let me just shut down the broadcast.